So I am looking at Euro USD. So during my previous analysis, I did expect this Euro USD to push to the downside, but this video is mainly focused on entry levels. So someone requested that I do a video explaining how to actually catch those entries on lower time frames. So here I'm just gonna clear everything and I'm just gonna start from scratch, explaining how to catch these entries on this smaller time frame. Mind you, this is a 5-minute time frame that we are looking at right now. So what I'm gonna do right now is to go onto the daily time frame. When I get onto this daily time frame, we want to focus more on where the market was when we first analyzed this Euro USD, right? So here we can see that there was this structure right here that represents a reversal in the market. If you watched my previous analysis of Euro USD was around these levels on the third touch of this trend line. So I did expect that this market would break out of this structure. Reason being that we have this area of value when we look on our left side of the market, right? So immediately after the breakout of this structure right here, which is our reversal structure, already we had spotted that the market had already had that first touch, second touch, and now we expected the market to give us that third touch and maybe break above to reach this level, which is our key area of value. Immediately after the market reached that area, the market presented us with candlesticks patterns right there that are representing a reversal in the market. So because this is now the daily time frame, I spotted these candlesticks patterns right here. So immediately after spotting these candlesticks patterns right here, I knew that the market was getting ready to push the downside. So this was just an indication that the sellers are getting ready to get into the market to push the market all the way to the downside, right? Maybe until this area right here, right, which is also our key area of value. So when we go onto those smaller time frames, there is just a whole lot of things that are going on right here on this candlesticks rejection. So if we are too zoomed in, we won't be able to see this candlesticks rejection. We won't be able to see this candlesticks pattern right here. So the best way to see what the market is doing is to go onto the higher time frames just to see what the candlesticks are how the candlesticks are behaving, right? So we go onto these higher time frames to spot the candlesticks behavior on the edge. If the market has reached the edge of the structure, we check how the candlesticks are behaving on these higher time frames, so that when we go onto those smaller time frames, we know what we look for, right? So with that being said, the market has given that candlestick pattern to indicate market reversal, right? So now I'm just gonna go onto the 4 hours time frame. When I get onto this 4 hours time frame, I want to see how the market was behaving right there on those candlesticks rejection, right? The market on the 4 hours time frame also indicated that it is getting exhausted. So this whole move right here is showing signs that buyers are getting tired. So now the sellers are just getting ready to push the market lower, because we also have this candlestick pattern right here. So what I'm gonna do right now is to go onto that 5-minute time frame. That is where now we look for our entry opportunities. So when I get onto this 5 minutes time frame, I want to see how the market is presenting me those opportunities, because now we are too zoomed into the market. We also how the market is behaving on those higher time frames, right? The market was showing signs that the market is getting ready to push lower. So right now what I want to do is to see how the market has been moving. Because we are too zoomed in, there is just a whole lot of noise, right? But what we want to focus on is at the edge of this market movement, right? We want to look at that movement and spot how we could have entered this market, right? If we look at how the market turned at the top right there, how the market turned right here, the market moved impulsively to the downside, right? The market moved impulsively to the downside. So immediately after the market broke this low right here, that was an indication that the market is about to change direction, right? So immediately after the market broke that low right here, I expected the market to give me a lower low, go back for the lower high, and then starts creating a series of lower lows and lower highs, right? So this is how the market moves, right? So now that the market has broken below this level, and then I did expect that the market will push back up to give me that lower high, right? But then the market went back in a form of a structure, that structure being the formation of a 1 2 3 formation. So my entry would have been after the breakout of this structure right here, and then my stop loss above that level right here. Mind you that this is a 5 minutes time frame. The lower the lower the time frame, the lower the risk, right? So even if my trade would have hit that stop loss, I wouldn't have lost anything because this is a low risk time frame, right? So I would have entered this, and then my target would have been this area right here, because this is a key area of value when we look on the left side of the market. But I didn't enter immediately after this structure has been presented. I waited for the market because we also have this area right here, right? We also have this area right here. So what I did is that I waited for the market to push lower and then break below this area right here. After the market broke this area right here, that's when I started looking for opportunities to enter this market to move lower with it. So what I did is that immediately after the market pushed to the downside right here after this structure, I then took my trend guideline from that top right there, and then I connected it with that second turning point, and then I extended my trend guideline to the right side, right? So look at how this trend guideline has been respected when the market approached this trend guideline right here, right? I could have entered the market right here, and then my stop just being above this same trend guideline, right? But I didn't do that. I waited for the market to present me with a structure, that structure being this structure right here. That 1 2 3 formation is right there. That is the 1 2 3 formation right there. That is a structure that is representing a continuation pattern to the downside, right? So I waited for the breakout of this structure, and then I entered the market, and then my stop just being above that same structure, and then I took the market all the way to the downside, right? My target being that area right there. I will show you that target when I get onto the 1 hour time frame maybe. So when we get onto the 1 hour time frame, my target is that area right there. My target is this area right here, because mind you, the market could be coming back to test that area right there, but we also on the daily time frame where the market has to go, right? But I couldn't hold it furthermore to the downside because this area right here was just irritating me. So if the market is eventually moving to the downside, I will wait for the market to present us with a structure. If we can just go back onto the daily time frame and look at how the market has been pushing to the downside. The market has been pushing to the downside impulsively without any signs of patterns. So the market pushed impulsively to the downside. So what I would expect from this market is that I would expect the market to maybe give us that continuation pattern to indicate that it's gonna continue pushing lower, and that is what we would be looking for when we look into these higher time frames, right? So for now, I'm out of these trades because of this kind of movement right here and because of this level right here. So I would expect the market to give us this continuation pattern and continue moving lower.